Three separate stories broke today, and each one matters on its own. But when you put all three together and read them as a single picture, you get something that tells you a lot about exactly where this market stands right now and what the next chapter might look like. We've got a geopolitical shock reversal that sent Bitcoin surging 5% in minutes. We've got a ghost from 2014 waking up in the worst possible timing. And we've got the most aggressive capital raising plan in corporate Bitcoin history being quietly announced while everyone else was watching the war. This is not financial advice. Let's get into all three. Story one, Trump pauses the Iran war and Bitcoin erupts. Bitcoin had been grinding in the low $67,000 all of Monday morning, stuck near a 2-week low and showing no sign of wanting to make a meaningful move in either direction. Then at 4:35 p.m. on March 23rd, Donald Trump posted on Truth Social, and everything changed in approximately 10 minutes. Trump described what he called very good and productive conversations regarding a complete and total resolution of our hostilities in the Middle East over the preceding 48 hours. He instructed the Department of War to postpone all planned military strikes against Iranian power plants and energy infrastructure for a 5-day period, subject to the continued success of ongoing diplomatic talks. Bitcoin surged to $71,401 within 10 minutes of that post. By the time U.S. equity markets had digested the news, the Dow was up 1.72%, the S&P 500 had climbed 1.49%, and the NASDAQ was up 1.79%. In oil, the single variable that has been suppressing crypto markets for the better part of a month, crashed. WTI crude dropped more than 8% to around $89 per barrel. Brent fell more than 11% to $103. Over $62 million in tokenized Brent futures were liquidated in the immediate aftermath. To understand why the reaction was this violent, you need the context of what this conflict has done to crypto markets since late February. Oil had surged more than 50% in a single month. Every escalation headline hit Bitcoin first and hardest because crypto is the only market that trades 24 hours a day. When strikes happened on weekends, when ultimatums dropped at 2 a.m., crypto absorbed the full shock alone while every other market was closed. And oil staying above $100 kept inflation elevated, kept the Fed from cutting rates, and kept risk assets, including Bitcoin, under sustained pressure. Every positive catalyst this month got overridden by the same inflation equation until Monday. But here is the part that makes this story complicated. Iran's response to Trump's announcement was not confirmation. It was a flat denial. Iranian foreign ministry officials stated there had been no direct or indirect contact with the United States whatsoever. Iran's parliament speaker described Trump's claim as fake news used to manipulate the financial and oil markets. And the market felt that counter headline almost immediately. Bitcoin gave back roughly $1,200 from its high within minutes of the denial hitting. CoinGlass data shows $415 million in total liquidations across the 4-hour window around both headlines combined. $280 million in short liquidations on Trump's post and $135 million in long liquidations when Iran's denial arrived. The market got squeezed in both directions in the same session. What this 5-day pause actually means depends entirely on what happens inside those 5 days. If the talks produce meaningful progress and oil continues pulling back, the macro pressure that has been suffocating Bitcoin for a month could finally ease. And this market has significant pent-up upside waiting to be released the moment that happens. If the talks break down and escalation resumes, we go back to square one. The diplomatic window is narrow, conditional, and contested by one of the two parties involved. Watch it closely. Story 2. Mt. Gox just woke up for the first time in 4 months. On the same day, Trump was pausing the Iran strikes. Something entirely separate was happening on the Bitcoin blockchain that almost nobody noticed amid all the geopolitical noise. Mt. Gox moved Bitcoin for the first time since December 2025. For anyone who doesn't know the Mt. Gox story, the exchange once handled more than 70% of all global Bitcoin trades. In 2014, it collapsed after losing roughly 850,000 Bitcoin in one of the largest hacks in crypto history. A decade-long legal rehabilitation process has since attempted to distribute what remained, approximately 200,000 Bitcoin, to the roughly 127,000 creditors who lost funds. The repayment deadline has been pushed back repeatedly and now sits at December 31st, 2026. Monday's move was small, 0.0071 Bitcoin, worth approximately $500 at current prices, flagged by Arkham Intelligence as the first wallet transaction in over 4 months. Arkham also noted something that reframes the entire Mt. Gox situation. At current Bitcoin prices, the exchange's remaining stash of 34,503 Bitcoin is sitting on over $10 billion in unrealized gains compared to when the platform collapsed in 2014. The creditors who have been waiting over a decade are now sitting on life-changing profits on paper. That context matters when you think about what happens when repayments eventually do reach them. Mt. Gox creditors are not institutional funds with long-term mandates. They are individuals who lost their Bitcoin over a decade ago, who have watched the asset grow from cents to tens of thousands of dollars, and who in many cases received their first professional exposure to crypto through a disaster. When that Bitcoin eventually moves to exchange wallets and becomes available to sell, the historical precedent is not encouraging. Every major transfer from Mt. Gox wallets has been followed by meaningful selling pressure in the weeks that followed. The two key things to watch right now: whether any of the 34,503 remaining Bitcoin moves to centralized exchange deposit addresses, that's the real signal of imminent selling, and whether the repayment timeline starts accelerating as the December 2026 court deadline approaches. Monday's $500 move alone is not a threat. It is a reminder. Mt. Gox is waking back up, and with $2.4 billion in Bitcoin still sitting in its wallets and 9 months left on the clock, this story is not done. In a market already dealing with institutional outflows, geopolitical pressure, and fragile sentiment, the last thing it needs is $2 billion in decade-old Bitcoin hitting exchange order books. It hasn't happened yet, but the clock is running. Story 3. Strategy just announced a $44 billion plan to buy more Bitcoin. While the war headlines and the Mt. Gox alert were dominating feeds, Michael Saylor's strategy filed an 8K with the Securities and Exchange Commission that deserves far more attention than it has received today. The company announced capital raising programs totaling $44.1 billion, all of it earmarked for Bitcoin purchases. The structure breaks down into three components: a $21 billion MSTR share sale program, a $21 billion issuance of Stretch, STRC, high-yield perpetual preferred shares, and a further $2.1 billion in Strike, STRK, perpetual preferred share sales. Taken together, this is the single largest capital deployment plan for Bitcoin acquisition ever announced by a publicly traded company. To understand the scale, consider where strategy already stands. The company currently holds 762,099 Bitcoin, worth approximately $54 billion at current prices. They added approximately 90,000 Bitcoin in the first 3 months of 2026 alone, including 17,994 Bitcoin on March 9th and 22,337 Bitcoin on March 16th. And now they are raising $44 billion more to keep buying. This is not a company hedging its Bitcoin bet. This is a company that has concluded the single best use of every dollar it can access is to convert it into Bitcoin as aggressively as the capital markets will allow. The mechanism matters too. By issuing preferred shares that carry high yield promises, strategy is attracting income-focused allocators who might never directly buy Bitcoin, but are willing to hold a yield-bearing instrument whose proceeds go into Bitcoin accumulation. It is an indirect channel for capital into this market that didn't exist before Saylor pioneered this structure. With $44 billion in firepower now authorized, strategy's buying pressure is not going to slow down. Moments of price weakness, the exact kind we've seen all month, become opportunities for them to deploy at favorable prices. What all three stories add up to. Here is the honest read on today. The Iran de-escalation is real, but fragile. 5 days of diplomatic breathing room that could disappear overnight if Iran's denial proves accurate and talks collapse. Mt. Gox moving Bitcoin for the first time in 4 months is a quiet warning on a long-term fuse, not an immediate crisis. And Strategy's $44 billion plan is the most structurally bullish piece of news in this space in months. Quietly dropped on the same day, two louder, scarier stories dominated the conversation. One entity with 9 months left to distribute $2.4 billion in Bitcoin to creditors who have waited over a decade. One entity with $44 billion authorized to absorb whatever supply hits the market. And a geopolitical situation that is either 5 days from a turning point or 5 days from another escalation. Watch the oil price, watch the Mt. Gox wallets, and don't let any single headline make you lose sight of the full picture. Drop a comment. Which of these three stories do you think has the biggest impact on Bitcoin's price over the next 30 days? I want to hear how you're thinking about it. Subscribe and we'll keep tracking all of it in real time. See you in the next one.